This week in construction and property, institutional investors pour billions into Indian real estate. Home prices keep climbing. Tier 2 and 3 cities see rising investor interest. The emotional weight of buying homes continues to shape decisions, and REITs outperform global peers. Welcome back to Brick Bolt Bulletin, your weekly construction and property update minus the jargon. Let's dive in. India's real estate sector has attracted nearly $80 billion in institutional investments over the last 15 years, according to a Collier's Trade AI report. Foreign capital dominates, making up 57% of inflows, but domestic investors have started driving growth post-pandemic. The sector has evolved from a fragmented market in the 1990s to a transparent and accountable growth engine, contributing 6 to 8% to GDP today. Policy reforms like RERA, GST, and REITs have boosted transparency, efficiency, and participation. By 2047, the market could scale to 5 to 10 trillion, up from around 0.3 trillion today. With so much investment flowing in, you might expect home prices to stay stable, but that's not the case. Home prices in India are projected to rise 6.3% in 2025 and 7% in 2026, driven by strong demand from affluent buyers, while affordable housing remains in short supply. Rents are also rising faster than inflation, and many urban residents are being pushed toward rental as ownership becomes increasingly out of reach. Experts warn that the deficit of affordable homes, currently around 10 million, could triple by 2030, worsening inequality in housing access. As affordability challenges grow in big cities, investors are starting to look elsewhere for opportunities. Investors are moving beyond metro cities, eyeing Tier 2 and Tier 3 hubs for higher growth potential. Infrastructure development, rising urban migration, and better connectivity are making these emerging markets attractive for both residential and commercial construction. Tier 1 investors are chasing aggressive returns in smaller cities, while Tier 2 and Tier 3 investors prefer stability in metro markets. Housing demand across India is expected to reach 93 million units by 2036, reflecting the growth appetite for real estate outside the top metros. But buying a home isn't just about numbers and returns. For many Indians, it's deeply personal. In India, buying a home is more than a financial decision. It's about legacy, identity, and social standing. Parents, cultural norms, and social expectations often push buyers towards ownership, even when renting might make more fictional sense. Despite low rental yields, that is 2 to 3%, high EMIs and illiquidity, emotional factors like proximity to family, school catchments, and lifestyle preferences continue to shape housing choices. Developers are also marketing home based on sentiment and lifestyle, not just ROI. While emotions guide many homeowners, some investors are following a more calculated path, and that's where REITs come in. India's REIT market, though young, is delivering 6 to 7% distributional yields, higher than the US, 2.5 to 3.5%, Singapore 5 to 6%, and Japan 4.5 to 5.5%. The sector has grown to a $18 billion market cap and could surpass $25 billion by 2030, concentrated mainly in Grade A office assets. Regulatory support from SEBI and reforms like dividend tax exemptions have increased investor confidence, and future growth is expected in logistics, retail, and data centers. That's it for this week. From massive institutional inflows and rising home prices to new city hotspots, emotional buying trends, and REIT growth, which story do you think will shape India's housing market the most? Tell us in the comments. And if you are planning your dream home, Brick Bolt is here to help. Book a free technical consultation today. Don't forget to like, share, and subscribe. See you next week with updates that actually make sense.